Welcome to Restart with me, Jason Tartick. Let me ask you, are you confused by some of the news that's happening today? Trust me when I tell you, you're not alone. I have 10 years in corporate banking. I've lent $100 million to companies all over the country through the banking system and an MBA in accounting and finance. And let me tell you, even when I hit on a tutorial like I am today, student debt, I am still doing hours of research, talking to people that are political experts and financial experts and consulting with them, and it still is confusing. So we are going to take all the craziness of the news and break it down so you know what you need to know and it's relatable to you. Today, we're going to cover student debt. So whether you have federal student debt or you have private student debt, there have been some massive changes that could impact you. For the majority, this impacts federal student government loans. But trickle down, it also could impact private student loans. So today, we are going to talk about who this impacts, what the proposal will mean to you, how it could change your payment, and things you must know going into the changes that are happening in our current climate. All right, so before we get into the proposal, I'm going to break down the differences between federal loans and private loans. Now, trust me, the differences get very granular. We're going to stay out of the weeds. We're going to keep this high level, just so we understand. Federal loans are held by the government. Private loans are held by a private sector lender. With federal loans, they don't require a credit check, unless it's the Federal Plus Loan Program for parents and graduates. Private sector loans do require a credit check. And in fact, usually you have to have a minimum score around 650. Now, because of that, it may be a little bit more advantageous from a structure and rate perspective. But both federal and private loans offer a ton of unique ways to deal with repayment, to deal with the loans, but they are completely different and treated differently. I will do a full episode on the granulars of these differences. So what is the proposal? Well, let's first tackle that word proposal. Okay, all my Bachelor Nation people out there, how many times have we seen seasons? The Bachelor, The Bachelorette, Bachelor in Paradise, Winter Games, Bachelor Pad, and we see proposals. How many times do those proposals make it to marriage? You can answer that question. That leads me to my next point. This is a proposal and it is yet to go into effect. But when it does, it should be retroactive to March 13th. So when it does go into effect, it will take the assumption that it went into effect on March 13th when it was announced. What is it? What is it? It is a freeze on student loan interest on student loans held by the federal government. When I think about freezing student loans, the first thing I think about is Jim Carrey in the mask. He's about to get arrested. He's running and they tell him to freeze and he actually freezes. And then they try to arrest him and he says, "But you told me to freeze." And then the cop says, all right, well, unfreeze. Now let's talk about what it means when your student loan interest is being frozen. Okay, so the federal government will be waiving student interest on student loans held by the federal government. We got that. Now, let's say, how long is this going to happen? Well, it's going to happen for as long as the fact that we are in a state of emergency, which will be determined by the president. And that could be anywhere, people are guessing, from 2 months to 6 months. So we'll see. But what does it mean? Well, let's first talk about who it impacts. It impacts 42 million Americans. Right now, 42 million Americans are carrying federal student loans. Now, I want you to guess how much student loan debt is carried amongst those 42 million Americans. $1.5 trillion. Now, I want you to think about that. Back in the day, it was a big deal. Dr. Evil, Austin Powers, $1 million.
$1 million.
Now we're talking trillion. We go from 6 zeros to 12 zeros, okay? But how does that impact your student loan? Well, if you are currently paying $300 a month, it's important to know you still are required to pay $300 per month. But last month, before this went into effect, your $300, this is a case scenario I'm making up, 70 of it went to pay interest, which means 230 of it, 300 minus 70, 230 of it went to pay the principal. What is the principal? The principal is the actual loan. So when you take a loan out, that's the principal, but then you pay interest on top of the principal. So last month, $300 payment, 70 went to pay interest, 230 paid principal. Once this goes into effect, your $300 payment, all $300 will go towards paying the principal. None of that will be paying interest. So in summary, this will reduce the overall amount owed over the lifetime of the loan, so it's a good thing. Also, if you are in deferment right now, interest is also being waived. So listen, as a guy who's been in finance, I know that 5 minutes of finance talk is 5 minutes too long. So tomorrow, tune in. I'm going to talk about different strategies if you have federal loans, about deferment, income to repayment strategies. We are also going to address private loans. Private student loans don't have as many options as federal student loans, but right now I'll leave you with this. It is a great time to consider refinancing. I have seen variable rates as low as 1.9% and fixed rates as low as 3.1%. So tomorrow, tune in. We're going to talk about more options regarding federal student loans and more options regarding privately held student loans. Thank you for joining me on this episode of Restart. Please like, comment, and subscribe.